Hey guys, what's going on? Kunal here, Bulls on Wall Street. First of all, I want to say thank you to everybody for coming into our free chat day in our Discord channel and watching me trade live. As always, I'm on screen share every single day, just like I was yesterday, trading live, explaining the markets and the plays, while also, in the chat room typing everything out. What I wanted to do, because we had, such a nice morning yesterday, a lot of you guys were asking me, okay, can you recap the trades? Like what was going down in some of these setups? Because as you know, in the trading day, things are happening so fast. And I'm talking about patterns that maybe some of you guys are not familiar with. And so I'm going to recap you some of the trades that, we took yesterday, and we'll dig into them. So the first two trades I took yesterday, one was this QGEN short at 26.35, and the other one was SDC short at 12.80. So the QGEN short, this is actually a pretty simple, it's a simple pattern. So this stock gapped down on some bad news. Their CEO, you can see, is stepping down. They lowered the revenues, like all that kind of stuff that happens in a stock that's going down fast. So what I did on this was take an ORB pattern. And what an ORB pattern is, as the stock kind of gapped down, the first candle, it popped up to 27. And then what I started to do is base under this VWAP area. And so I took the position right as it's holding under that VWAP in the 2630s for, the potential move down. Now, where I screwed up on this trade was as it was just sitting around here, I ended up actually covering it, you can see here, for 20, 30 cents, because it had just been grinding. And it was grinding, and what happened was when it broke over the VWAP right here, 26.05, I ended up covering my short in case of short squeeze. And then, it dropped down like $1 or so, later on. So this type of trade, number one, I did ORB on it, but I mismanaged the trade. There's a fudge factor involved when you're using things like the VWAP. So when you're using things like the VWAP here, just because it like nicks over the VWAP for a second, doesn't mean that you have to be so zoomed in that you get out. What you really should do is let the whole candle kind of hold over that VWAP with a stop in case the candle gets really big, right? You want to give yourself a little bit of that fudge factor, because like levels, they're never exact to the penny. Sure, sometimes they are. There's people that use Fibonacci's and moving averages, and there are times that it'll stop to a penny. But more often than not, stocks will go like a little bit over and then come back under. And so a couple things I should have done. I could have covered here and just protected my risk, which is what I was trying to do. But as soon as it remounted back under, I should get into this thing. I had like 1,000 or 1,500 shares, this bad boy. So I dropped a little bit. I left a little bit of profit on the table, not getting back in. Then we had a trade in this SDC. So this is your quintessential ORB pattern. So what I mean by quintessential ORB pattern, we do an ORB pattern, which is an opening range breakdown. It's a 3-candle pattern on a 5-minute chart based on a stock that's showing weakness with some type of gap in the morning. So we were trading SDC the day before too, and we had this thing short right at 14.96. And you had this like beautiful kind of flush, and so it was already on my watch list. It wasn't like, I had to just conjure this thing up out of nowhere. It would have showed up on my scans regardless, but I like to trade stocks multiple days in a row. It gives you a certain familiarity to what you're trading, as every stock has its own kind of nooks and crannies and wants and likes on how they move, right? The thickness of it. So the next day, you could see here, like you went from 30, 60 to kind of 30, 30. So you get into like 20 cents, 15 cents. And you had this big spike down at the open. Now, I don't want to chase it down the first candle, guys. Don't want to chase it down the first candle. I've seen so many times in my career where you chase it down that first candle, and then they just kind of shake back up, right? So what I want to do is wait it out. I need 3 sideways candles to get this thing going. So as this thing popped down, and then you got a sideways consolidation, and it's holding under the VWAP, when you break this range here, right on the 3rd candle, that's where you want to take it. So I shorted this thing at 12.80, and then we actually ended up managing the trade pretty good. I covered a portion at 12.45. I covered another quarter at 12.28, and then I covered the rest in the afternoon at 12.09. So it took 70 cents out of that last quarter. It's a cheaper stock, so you can get a few thousand shares or something like that. that ends up being like a really good trade. And then, you know, later on, it actually had a beautiful flush into the close in a day-long consolidation play, which I missed because I was gone for the day. But that would have been a really nice one too. Always keep an eye. Once the stock is starting to really tighten up, you know, make sure that you can get back into these things later on. Now, we had some trades in Labu that were really nice. Labu is not like a huge mover in terms of range like it would be like, you know, small cap, but it's a 3X ETF. So Labu is a 3X ETF that is based on biotech. So when the biotech market moves around XYZ, then Labu moves around too. So my first trade of Labu, and it was pretty quick. I got this thing short 29.42, and like within minutes, you know, I'm covering off half at 28.85. So when this stock broke down, this is kind of a quick pullback buy. See how the stock broke down and then popped right into the VWAP. Now, when it tails over the VWAP and it remounts back under, that's when I want to short it. Tails over and it remounts back over. We call that a shake and bake. It's a shake and bake, meaning, okay, this stock, it broke over and then it pulled back under. The first pop, guys, after a stock flushes, the first pop, a stock or ETF, the first pop is usually the highest reward. So, boom, like I want to take this thing short, and then as this thing is coming down, it gets down to about 20.83. As it's flushing down here, I want to cover. And the reason I want to cover is like if you look at like a longer term chart on this thing, hold on here. If you're looking at like a 30-minute chart, you got like a lot of leeway here in the 29 zone. So I would definitely want to kind of cover some into these. You see where these tails are? It's like 28.50, 28.50, 28.50. So I'm thinking like 28.50 is probably the max it can go. So I definitely want to like cover into that close to it and then see where the rest rides. So I took off half of it, and then, you know, the other half, I let it ride. And what I usually want to do is I want to re-enter a half. So as this thing pops back up, once it remounted back under the VWAP again, I'm re-short for like essentially what's called a scalper's trade, right? So it's like, say you had 2,000 shares, you re-short 1,000, and then, right, you cover back into the flush around the round number at 29 and get this party going. So I re-shorted this thing, and then at 29.40, covered half at 29. And so what I'm doing is I'm playing around with that range. Why that's important is that if you could take like this first half, right, we took almost $1. Then you can take 40 cents. You can add up 40, 50 cents and make it into dollars. So it's a $30 stock. You know, you take 50 cents, 80 cents a few times, guess what happens? You add up to $2, $3, it's almost 10%, even though you're right, just taking quick shreds. And one of the reasons I want to do that is that if this stock was trending down its EMAs, like it was a 9 EMA trender, then I'd want to just keep holding it and like add into the EMAs. But because it's more sitting in a range, then I've got to kind of dip and rip around it so that I can kind of add it up into that because I still know that it's pretty weak. My next trade was actually a loss, which was on this JNUG, which was at 66.09, and then 66.09, and you can see here, I ended up selling it for like minus 50 cents. JNUG is it's a gold ETF. It's got a lot of volatility. It just, sometimes it just has too much range, and it just didn't want to go yesterday. A couple things I should have noticed that on it was, number one, my setup was fine. The stock had a gap up here. It's also breaking over its MAs on your daily chart. So you got your breakout over the MAs on your daily chart. You got the gap up, which is a sign of strength. Now, JNUG, you never do a 3-candle ORV pattern on it. 3X ETFs or 2X ETFs like TVIX, JNUG, you don't do ORVs on them. You wait for the pullback. So I like usually like a 9 or 20 EMA pullback, something deeper, and then try it because ETFs, they pull back and then they go. So this stock started to pull back, got to 20 EMA. I need a green candle to hold. When I get a green candle to hold, then I know that this level is right. So I added here on the green candle to hold. So the next candle right at 66, I added, it popped up like 40 cents. And then what I'm doing is I'm putting my stop under the 9 EMA here, and it kind of just kerplunked out, and I end up losing 50 cents on the thing. It tends to move like 50 to 80 cents per candle, so it's an acceptable risk. You know, you can't trade this one with too much size due to the range of every candle, but you take the loss, lose 500 bucks. just the nature of the game. And, you know, those were the trades in the morning. Guys, we do these free chat days all the time. It's a great way for you guys to just kind of watch me and mimic some of the strategies on your own time. Use your simulator, things like that. What we're doing, check your emails for those of you guys that were in the free chat day. Check your emails. I've got a special offer for you guys for people that were in that free chat day, where I'm going to give you a 1-week trial to our day trading chat room. Our chat room is not just a chat room. Most people have chat rooms and then that's it. Our chat room is an all-inclusive study learning portal, meaning beyond the Discord chat, you have access to our on-demand trading bootcamp, which is 19 classes of everything you really need to get going in terms of risk management, psychological stuff, pre-market routines, how to use VWAP, anything you can think of, I've got it in there. So it's a to Z bootcamp. We do lessons of the day where, you know, I put in certain lessons, really little vitamins that I think are nuances that you can't get in a book. You know, so we take real life examples, and they'll be like very, very short lessons that talk about the nuance of, like, you know, sometimes you kind of switch something around that's a little bit non-textbook. We do those lessons of the day. I do Sunday night market huddles. I get everybody ready. So on Sunday, every Sunday, what we'll do is we'll do a class where we get ready for the market. I actually go through my scans one by one. I give all the students access to those scans, and then we flip through this stuff. We go through it, and we literally build out our watch list of swing trades and day trades, get ready for the trading day, answer everybody's questions. And then, of course, 3 days a week, we do market recaps where I dissect all the trades like I'm doing just right now for you guys. So every single trade I'm taking, Mondays, Wednesdays, and Fridays, we get on a live webinar, we dissect and we figure out what I did right, what I did wrong. Sometimes it's an embarrassment because I screwed up, and sometimes it's a celebration, but it's all a learning lesson. I've got a deal for you guys, $19.99 for any of you guys that were in the free chat room, and even if you weren't, just hit me up and I'll make sure to get you a trial. Guys, we have a really fun chat room. It has been an awesome ride to kind of redesign the website and the business model. I'd love to see you guys in there. If you have any comments or questions, anything like that, come and ask me. You know, our day trading portal is awesome. I've got everything you need, from the scans, the software, the trading checklist, the layouts, premium content, anything you think you need to learn, it's all in there. If you got any questions, concerns, hit me up or leave a comment. As always, give me a thumbs up if you like what we're doing. I'll see you around. Take care.